Jeff, Zach, thanks for joining me.
Hi,
Hey,
Steve.
Steve, thanks for having us again.
Hey, good to have you. We're talking about onshoring, reshaping real estate. We're seeing a return of high-tech manufacturing to the United States. Um, North America's witnessed over 300 manufacturing facility announcements. That's representing almost 400 billion in pledged project investments, 250 million square feet of new development over the next decade. That's just what's been announced. A standout market here is Phoenix, where Intel and TSMC have announced plans for combined investment of about 85 billion into new chip factories, and that's going to bring a lot of other real estate projects with it. Obviously, you're going to have multifamily, but you're going to have other things to support all those workers. Some good paying jobs there too. And in the case of Phoenix, it's really kind of putting it into a bigger role in the whole global high tech industry. Some of your thoughts as we're seeing a return of manufacturing start to reshape some real estate markets.
I think it's kind of self-explanatory in a way, but as an example, you look at the innovation corridors in certain areas, like what happened in Texas and in Austin. You saw it in Tampa, Columbus, Ohio. There was a large Intel plant that was on the books there. You're seeing high-tech plants in the Southeast. Wherever you're seeing this stuff pop up, you are seeing massive new waves of development and migration. And you're decoupling yourself from supply chain issues or problems with adversaries. So it does create a lot of new opportunity. It does create a lot of real estate opportunity, and it probably overall benefits the general economy and the United States as a whole.
Yeah, I mean, I think I probably want to agree with that some. I think the initial onset of it probably ends up where it looks like it's more expensive until things settle down, just because the reality is you got to create the infrastructure before you have some of the efficiency that people are going to be looking for. So, and I think there's some nuances that have to be figured out, but I think in the long run, it probably looks better for the United States.
Yeah, and I think what's notable here from an investment perspective is, say, a multi-billion dollar fab gets announced. Well, how do you participate in that? Well, obviously, you're not going to participate in the fab, and we're not talking to too many people that are going to be selling lithography equipment or etching systems. Um, but those workers have to live somewhere. They have to eat somewhere. They have to, work out, recreation. So when you start seeing investments on a scale that starts transforming an area or really having a material impact, as a real estate investor, that does create opportunities, and it creates opportunities all the way from that multi-billion dollar facility down to, single family homes.
Well,
And in our case, multifamily investments or offices or other commercial spaces. It really creates opportunities all along the kind of real estate chain.
yeah, I mean, I think something that we, at least Zach and I discuss all the time is everybody's looking for their billion-dollar payday, right? And the reality is when you start looking at something like this, it's not always the macro view that you should be looking at. Sometimes it's micro. Maybe it's investing in a Burger King, right? Maybe it's investing in a Walgreens or something that's needed in that community, that area that surrounds where some of those construction, some of those jobs are going, and you find that you found a however you want to pronounce it. Maybe it's a niche, maybe it's a niche, but I think in reality you find opportunity where everybody else is looking for a macro opportunity. You find some micro opportunities that don't always make you a bajillionaire, but somehow they do create a lot of opportunity elsewhere.
Well, along those lines, when we look at opportunity areas or opportunistic areas, I guess, we're not looking for those home runs. We're looking for
Yep,
things that have stability. So
that's
you
right.
can have something for today, you can have something 20 years from now. And we are very selective in what we look at and how we look at it because it's slow and steady wins the race. And if you do an above average job of hitting 15 to 25% returns without losing money, you're going to exceed pretty much any other investment, especially the home run ones that usually fall short at some time in at some point.
Yeah,
Yeah, I would also add one of the things we do is we look for business friendly areas to invest in. And those are exactly the kind of areas that attract these kind of projects. When large companies are looking at where they're going to put a production facility, yeah, what kind of tax breaks, what kind of subsidies, they all matter. But definitely going into the equation is this a business friendly environment? Is this a place where it's going to be easier for me to build and operate this facility? Is it an easier place where it's going to be for me to attract and keep workers? So, I do think that when you focus on markets with good dynamics, good things tend to happen for you. And those are some of the markets that are going to benefit most from this reshoring trend.
Yeah, for sure.
Okay, thanks for the insights, guys. If you enjoyed the video, give us a thumbs up. Let us know in comments what you think, what we're missing here, we should address some more, and visit our website, selectfincap.com. Register for our free newsletter to read the latest in commercial real estate investment trends and get a look at exclusive investment opportunities, maybe in an area with some reshoring manufacturing going on where there's folks needing new places to live and to eat and to shop. Thanks a lot, guys.
Thanks, Steve.
Yeah.